Hi, guys. Thanks for tuning in to another episode of Nuggets News. We've got a very special guest today, someone I've been meaning to have on the show for a couple of years, and we finally got to sit down together. So that's Professor Jason Potts from RMIT. So thanks so much for joining us today.
Thanks, Alex. It's good to finally be here. We've been playing tag on this for a few years, as you say.
We had one of the most interesting conversations I've ever had about, I guess, the future of money, work, blockchains at RMIT that day. And I guess today we are going to dive into all of that and how the world is really changing and challenging government's notions of money and taxation and economies. So, for those that haven't followed you at all, do you want to give us your background and maybe what led you down that rabbit hole towards cryptocurrency?
Yeah, thanks. So I'm an economist. I'm a professor of economics at RMIT University. Headed up the blockchain innovation hub along with Chris Berg, which was at the time that this was founded in 2017, the world's first social science research institute on blockchain. But my interest is I've long been. I mean, my entire career has been about innovation economics and the economics of new technologies, and I've been particularly interested in the question of what happens right at the beginning of a new technology. How do we go from initial invention to the process of discovery of the value of ideas and that early phase thing? I came across blockchain. It was introduced to me by a colleague of mine, a friend of mine back in Brisbane, Joe Clark, who was at the time working in the finance sector. And he came to me with this idea, would have been about late 2010, early 2011, that Bitcoin, it's wildly, crazily unstable. Someone needs to invent a futures market. And he had this plan to, it would involve buying a huge quantity of Bitcoin and building a deep liquid futures market then. And I managed to talk him out of it, which I mean, he still speaks to me, but only
Yeah,
just
yeah.
because of this. But I sort of started to pay attention to it then. And um, started to sort of think about this notion of Bitcoin as innovation, as a new technology, and try to understand what was fascinating for me as an economist was this was a technology that broke all the laws of the way in which innovation normally works. It wasn't patented. We didn't know who invented it. It just sort of appeared in the world without a company, without financial backing, without a clear entrepreneur, just without intellectual property, without innovation policy, government supporting it. There's none of the things that is meant to be true of how innovation works. So I just got fascinated with it as just a very exotic technology that as an innovation economist, I wanted to understand what was going on here because not only did it break all of the rules, it was the fastest moving technology we'd ever seen in terms of innovation adoption. It was much faster than mobile phones or other things that were previously just incredibly interesting for how fast they were moving. So exotic object coming in and studying this as an economist. But as you and all of your listeners will know, this is the rabbit hole of all rabbit holes. Once you start here, there's no coming back. And I just got absolutely fascinated with this, and then started to sort of really try to understand how a deep understanding of what was going on with Bitcoin in particular at that stage could help us understand the broader notion of how open source software innovation works, how innovation technologies work, and so on. So that sort of started this process. I'm an economist, not a computer scientist. So about 4 years ago, we started getting together the idea that there was lots of research centers around universities around the world that were starting to devote themselves to understanding the computer science and the technology side of this. We figured we needed to figure out the social science, the economics, the political science, the sociology, the anthropology. Just here was a rapidly evolving technology that was clearly going to impact not just parts of the economy. It wasn't just money. It was going to impact a huge range of things. Governments had no idea. The business community was confused. The entrepreneurial space was simultaneously excited and terrified. And the thing that we realized was students were really interested in studying this. So we just saw an opportunity there to actually come at this from a university perspective and go research center to help us understand this. But we're a university, we teach courses, right? So we want to help prepare students to live in a world where cryptocurrencies and blockchain technologies are an increasing fundamental layer in the jobs, businesses, careers that they're likely to undertake. So we pitched this idea to the university. I said, look, this is a fantastic research idea. This is fantastic for helping government and the Australian public understand this. We can do outreach to media. We can help the regulators and legislators and so on understand this. But most importantly, we can help prepare students for this world. So that was the vision behind the Blockchain Innovation Hub. Now we're still growing rapidly. We've just hired, or just in the process of hiring, 2 more researchers this month. We've opened their first full degree program in blockchain, which will be launched early next year. The huge demand for this. Things have been going incredibly well with that.
Yeah, there's is there a applied there's already an applied something of blockchain in Australia, isn't there? But you guys are doing something different again, as you say.
Yeah, so there's like a number of universities have established individual courses
Yes.
in this space, and we got onto that as well. But what we're about to launch, or technically has already launched, and students can enroll this already, is an entire degree program in blockchain. It's blockchain for business.
Fantastic.
So this is a an undergrad degree. You do sort of introduction to sort of economics, accounting, management, and so on, the standard core, and then sort of 8 courses that are specialized around crypto economics, crypto finance, applications, crypto and smart. There's 2 smart contract courses, a full range of things, and then we can end that with some research projects. So this is a new offering that we've got.
So just zooming out a bit, when you first graduated as an economist, were you very traditional, or were you sort of, did your thought processes change around the time of the GFC? We're really down this path now of people talking about things like MMT and QE and negative rates. So are you on the traditional side where we can stimulate the economy, or that the models are broken?
So I'm what's called a heterodox economist. I noticed you had Steve Keen on a few episodes ago. So I've studied and taught post-Keynesian monetary economics, monetary macroeconomics. So that's all of that stuff is quite familiar to me. But my background area is technically evolutionary economics, or Schumpeterian economics, which is the idea that we can use evolutionary models or complex systems models to understand an economy. So my perspective isn't sort of standard neoclassical economics, sort of mainstream economics from the growth and innovation perspective, but this idea that economies evolve and that innovation and new technologies are the main driver of economic growth, which is why my interest in this technology.
So would you agree that their models are a little bit too simplistic? Or I just feel that sometimes what they project about dropping rates and printing money to stimulate in the infinitely complex world we live in that's now going digital, and we're going to get right into how money is changing in all of that role. But to me, it just seems like it's clearly not working anymore, where they keep saying, oh, we're going to get back to 2 to 3% growth next year, and it's just not the way the world works anymore.
Yeah, let's say these are deep, complex matters, and we could talk for hours or days about this. But I mean, I think the broad perspective on this is that cryptocurrencies have really forced a rethink about how fiat money systems work. We thought we had a pretty good understanding of it, and the main thing that's shifted, and the thing about what a lot of the post-Keynesian monetary theorists, but also the Austrian economists, the Keynesians and the Austrians actually have a very common overlap in this idea of endogenous money, or this idea that money is created within the economic system, not externally
by a central bank
from outside. So post-Keynesian monetary theorists like Steve Keen, Austrian economists like Friedrich Hayek and others are actually politically very different, but from their understanding of how money works in an economy, are actually on the same page, which is this idea that money is endogenously created through an interaction of demand and supply within it. Now, the key insight, the thing that cryptocurrency just absolutely made clear for us, was this idea that money is a technology. It's an institutional technology. There are many. We can have technological change, we can have institutional change in monies. And so what we now have is this notion of money as of competition in money arising from innovation and technology. And that's new, right? We haven't had that before.
Yeah, I wanted to jump in and say, do you want to maybe walk us through a bit more of the history of money? Because I think there's a few sort of misconceptions around people just thinking, oh, the US dollar is the world reserve currency. And before that, it was a gold backed system. And then we had just things like shells and barter. But there's a lot of change throughout history, isn't there, about private versus state money and what people use to trade and barter. So do you want to talk about that and maybe some of the misconceptions?
Yeah. So again, this is a very deep topic, and we'll just
The
cover
short version,
some
yeah.
very the short version of the global history of money.
Yeah.
In the beginning, so the first point, money is the oldest of human technologies. It goes back as far as numbers and writing and history itself. Like it's one of the very first technologies that humans have, because trade is fundamental to the sort of societies that we have. So whenever you've got trade, you've got money. Right? It's a medium of exchange, a unit of account, a store of value. Right. So next part of the story is money is what money does. Right. So what gets used as money is whatever works best as money. And money does at least three things. Unit of account. This is the notion of a price is a price in what? What is it measured in? Right. So this is it's a store of value. It's a way of moving value through time. To be able to hold it and it come and it's also a medium of exchange. It has to be convenient. It has to have these certain properties. So what has worked effectively as money through history has been a consequence of changes in the technologies of providing those different qualities. Historically, money hasn't been government money. Historically, money has been usually a precious metals or shells or these other things, but they were money because they were chosen as money by people who were needing to use it. So it was a consumer selected thing. The modern era of government monies, of fiat monies, is again an improvement in the technologies of money. But the reason we have government money in the first place, sometimes called legal tender, but the reason we have fiat monies and government monies is because you are required by law to pay taxes in that currency. Right? That's the reason it's a money. You can use whatever you like for trade, but you have to, when you're paying your taxes, you have to use this thing. So what tends to happen is that for convenience purposes, if everyone has to pay taxes and everyone has to eventually use that money, we might as well use it for things as well. And so you end up with this situation where, for convenience, citizens are using this government money that they are required by law to use for paying taxes, also for their own trades themselves, because now governments can go further and they can add legal tender to that concept and say, actually, you don't have any choice. You have to use this for your own private trades. But again, just as emphasizing is that governments are creating a type of money that is often widely adopted by citizens in a nation for convenience purposes, because they're using it for other ones. So that's the sort of long and short of it. Now, what that means, though, is that governments are in a special position with respect to money. They can create it. Anything that is issuing a money has a special position with respect to money, and which is why there's often a lot of power associated with that, and then a need to control things that have that things.
Absolutely.
So now we're in a world of banking and so on that have those capabilities.
And that's one of the things we've been doing a lot of education on at the moment, is that power struggle that Bitcoin has now highlighted and brought the conversation to the forefront. And I still don't think governments, even banks and central banks, fully understand this, but they all know that they're kind of in this power struggle now, because there's a fourth option, which is cryptocurrency, or I guess all digital assets that can take on value. And we're going to get into your work on hyper barterization. I love
Hyperbarter, yeah.
Oh, hyperbarter.
So
I love
this is well beyond money. This is what happens after money. Is the concept there?
But the three parties that are in the battle is the central banks that, in theory, they believe that they control and interest rates and can issue more currency or money. But you've also got governments that can spend it into existence, and now people are talking about modern monetary theory. But you've also got the people that argue about banks and lending, and that loans create value. And now you've got all three of them that kind of want to create their own digital currencies. you've sort of heard this all being thrown around about China creating their own, or JP Morgan creating their own coin. So this is where I guess the power struggle is, and I don't think either of them realize what is going on, that they may lose or gain a lot of value depending on what happens. And then you've got Bitcoin and cryptocurrency. It's almost like the people's money sitting outside of that scope entirely.
Yeah. So we've been here before. Like during the 20th century, we actually had something that is similar to the situation we're in now. But instead of citizens using money and having choice over which money do I use in my daily actions, do I use government money, or do I use Litecoin, or do I use Bitcoin, or whatever I'm going to be using. Traditionally, through the 20th century and even earlier, the competition for money was conducted at the level of international trade. And what we observed through that period, what happened through that period, was that you ended up with a hegemon, a particular powerful, usually colonial power in the early stages, but an empire in later stages, would become the choice through which everyone used their money, right? At the moment, that's the US dollar. Once upon a time, it was the Great British Pound.
Yes.
In earlier periods, it was different things. And what you've got situations there is trade between Australia and say Indonesia might nevertheless be denominated in the US dollar. Often is not. So what you end up with then is that it's exactly the same situation we've got now, where two countries or two citizens are choosing to use a third money. But the reason they're using the US dollar and not Australian dollars or Indonesian rupiah or whatever is because the US dollar has some nice money properties. It's universally accepted. It's a unit of account. It's a global unit of account for trade and settlement. So we're choosing a money based upon its qualities as a money. And with the 20th century was essentially a long sort of global power struggle about exactly this, which nation money do we use? What's just happened is that thing that was taking place at the level of nation states has now come down to the level of individual citizens choosing over these spin-up monies, these private monies that have suddenly entered and have some really nice money properties. Bitcoin is a very nice money in some dimensions. It's a bit not necessarily a stable unit of account in other things, but it's able to compete. And this is the same thing with a Libra currency or a JP Morgan coin, or it's
do you think
that's the world we're in now?
Do you think that this is, I mean, this is my personal belief, that we've got two of the biggest opportunities in front of us that are firstly money, because of how, I guess, almost calcified it's become, because banks have had it so good. Most of the wealth has been created in financial markets from actually not creating more innovation or jobs or real prosperity, I guess I would say. So that's sort of really calcified for, you could argue, 30 or 40 years. And then you've got the internet, which was set out to be something that it kind of hasn't turned into. Now we've got these tech giants that, again, have really siloed things. So I think that, firstly, money is the biggest opportunity to really improve or upgrade for everyone. And then you've got internet and value and information and blockchains themselves that create these sort of global ledgers for the free flow of information and value. That's the second biggest opportunity that exists today. Would you agree with those two things?
Yeah, look, I mean, I'll refine it a little bit. I think sort of the banking system plays a fundamentally important role in a modern economy, a productive role, in the sense that it's. I mean, what a bank is it's a thing that processes information. It finds who's long and who's short, and in terms of who wants finance, who's got surplus savings. It's a matching platform. Right? Yeah. So a bank is like it's a digital platform for matching supplies of money with demand for it. Now it's also a licensed platform. It has privilege. It has you have to have a banking license, and that gives you ability to price, and it makes competition hard with it. So you've got some rent-seeking monopoly, abuse of power, just waste aspects, but you've also got a fundamental productive function of it. What's interesting is that's being separated right now, and that all used to be lumped together, which made banks profitable, powerful, and useful in the 20th century, but very hard to compete with. which meant that it was very hard to get new innovation into that space. So,
Well, I was going to say
it
what you've
tended
just
to.
described from one of our audience members who's not familiar with banking at all. They're listening to what you've just said and said, "Oh, Jason has just described DeFi, a digital platform that
Yeah,
brings people together for the function of lending and borrowing, and we're starting to create credit scores and risk scores and reputation in the digital
yeah.
world." It's beautiful, isn't it? Are you pretty familiar with
And
everything that's
like
happening in DeFi?
yeah, and I think that's the single most exciting part of this whole thing. And I'm enormously optimistic and excited about the whole DeFi space. I think this is the natural, this is where it goes. The what's interesting from an innovation perspective is it's just how fast it is moving. But also
Yeah.
what's interesting is it's kind of they're replicating the last 500 years of modern finance. Every 5 days they discover a new thing that took 50 years to figure out. But the reason that the modern banking system is so deeply regulated and controlled and so on is that over that 500 years of evolution that took place, it kept running into problems and kept solving those problems with rules. Those rules made their way from from a club of bankers agreeing to these rules to make their way into regulation and then legislation. We're at the end of that 500-year process where what that means is that banking is now a global regulated system. The DeFi space is on the internet in a global context, with all of the other sort of monies and tokenized assets and so on in that. But it's running into a lot of the same problems. Just how do you deal with reputation? How do you deal with asymmetric information? How do you deal with these other sorts of things? So I'm extremely optimistic about what will happen in the DeFi space. But my prediction is that just as with all innovation that we see, there'll be a lot of creative destruction. A lot of the existing firms and chains and protocols will be destroyed, not through necessarily any fault of their own or any bad tech, just because that's what happens in a rapidly evolving space.
I've been listening to some fantastic podcasts recently with some thought leaders in this space, and they're talking about this bankless nation, or like the idea of a digital citizen that's entirely online. And then later on, we'll get into how you tax this and the role in the economy there, but also the natural equilibrium, which I think governments have just really distorted lately, and the idea that it's very healthy for businesses to die, and that turnover of ideas, and we need overinvestment and failure versus what's happening at the moment. You just see the number of zombie companies, and that's actually really bad, isn't it? John, I'd love to hear your thoughts on that, on freeing up people in the labour force that should be going to new jobs and businesses should be failing.
Yeah, thanks, Alex. So this is a bit of a hobby horse of mine. So my view is quite straightforward on this. The reason I like market capitalism as a system, the reason I support that system compared to all others, is not because of its sense of justice or its sense of fairness or whatever. It's because it's a fantastic evolutionary system. It's a learning, experimenting system. And how it learns and experiments is it tries lots of stuff. Entrepreneurial experimentation. It's geared to do that. That's what finance is in an economy. The purpose of finance is to provide capital to enable experimentation to happen. The reason I favor less regulation rather than more regulation is less regulation enables experimentation to happen. It provides a space to do that, but the price. The Faustian bargain of that is that we have to tolerate a large amount of failure. We have to enable things to fail quickly, pick back up again, reallocate those resources, and off we go again without reputational damage, and to maximize the learning. So everyone says, look, this blew up, here's why it blew up, or here's what we learned, off we go again. So I like maximum freedom of information sharing. Now, one way we can do that is labor markets, where people can move easily between companies. So people take the information with them. The other way is a good media system, the very stuff that you're providing. If we've got some sort of media ability, or just way for information to be shared, just what succeeded, but also what failed, and for the communities to provide that. Now, traditionally, that's industry media, that's industry associations, that's all of the various sort of secret clubs and societies, that's universities, that's a whole ecology of information sharing. But if we have a system that enables fast, low-cost experimentation, that tolerates rapid failure and crucial learn from that and sharing that information, what we get the system that can evolve, that will discover works, that will once discovered that capital, and now instead of venture finance, now we're in the investment capital phase to scale that up, and now we need corporations and other sorts of organizational forms to do that. So there's a whole lot of institutions around banking, finance, corporate law, and so on that need to be there in order to get this. But to my mind, the most important thing is actually just a willingness and a tolerance, a societal tolerance for this type of rapid failure, because that's how we learn.
Yeah, and just really digging into that a little bit more. When I see the ICO bubble, to me, it's very necessary. It's like the dot-com bubble. Whereas my fear is that they come in and there's overregulation, and that stops possible, future innovation. And then you said, YouTube and us providing education. Now you're starting to see the heavy hand of censorship, whether it's Trump's tweets or different content on YouTube. Is that what excites you again about this censorship-resistant platforms and blockchains?
Yeah, so I'd agree with that very strongly. I think, but one of the things is that's the sort of censorship resistance didn't come from nowhere. That was a founding value that came out of the cypherpunks, who, back in the sort of 70s and 80s and 90s. That was their strong commitment to building technologies of freedom and technologies of communication. Or creating freedom through effective technologies. And this was, all the encryption technologies and other sorts of ways of being able to create that situation of freedom to communicate and avoid censorship and avoid government control of these things. So, again, it's not an accident that these things come together.
And when Australia has something like their encryption laws at the moment, I don't know what to even make of those, and if that's keeping businesses and innovation away from Australia that might otherwise come. But yeah, where do you fall on that? And again, the censorship resistance. If they say, well, you can't do lending in Australia, but on Ethereum, I can lend to you a digital Jason Potts no matter what, because it's censorship resistant. So where's all that going in terms of you can't do this?
I'm very down about this. I'm very sad that Australia has made these choices. I think what hasn't been fully appreciated is the trade-off that everyone likes security and safety. That's you can't be against that. However, the more that you push into that space, and you're trading that off against the technologies that we need to build this industry. So these are hard trade-offs. I personally will choose an extreme amount of I want this technology and industry to succeed, because I think the net social benefit of that is orders of magnitude greater than the potential benefits that come from increased government, lowering the cost of government snooping. But again, that's a decision that I didn't get to make.
I mean, on a little bit of a tangent, we talk a lot about the Australian economy and the economic complexity. I'm sure you're familiar with that. I mean, the only reason I feel like I'm ripping on Australia so often is because I see the potential that we have, and we're just so constant. Like even the government, their first stimulatory measures are how do we support the housing market or whatnot. And again, banking and loans and lending, and not enough is going into that innovation and technology and the right resources. Yeah. I'd love to get your thoughts on all that.
Yeah, I have very strong opinions about this. I think this is a huge opportunity for Australia, where the opportunity here isn't individual industries or individual companies. The opportunity here is what blockchain technologies bring, just broadly understood, is their base layer economic infrastructure, their payments, their record keeping, their orders and control, their trust, they're the base layer economic infrastructure that you can build digitally, decentralized, relatively trustless in this space. If you can do that, you can export it. And this is the incredible thing. It's that we've never had that opportunity before. Export industries were always when we sent stuff overseas.
Yeah.
We can actually export our infrastructure now, and therefore everything that runs on it, all the companies and so on. We can build those rails and export them. This is a huge opportunity that arises in a digital economy that was never possible in an industrial economy. Now, Australia has high quality infrastructure. We are lucky. Our politicians are relatively uncorrupt. Our civil service is relatively high functioning. Compared to the rest of the world, we're right up there, maybe in the top 10, and all of those things, which means we have trusted, high quality economic infrastructure. If we can digitize that and move that into a blockchain environment in such a way that the regulations become hard-coded, that the money becomes a digital money, and so on, that then becomes a platform for Australia to be a economic infrastructure for the region, for whoever, wherever the internet goes. That could be the single greatest economic opportunity for Australia ever. But it depends, and this is where it comes back to so what's the price of our cybersecurity regulation? It's this.
Yeah.
What's the cost of being slow to sort of update our own regulatory environments to enable blockchain and businesses and industries to grow? It's that. So I think this is simultaneously the single greatest opportunity that Australia has ever had. Also, the opportunity that Singapore has, or opportunity that's unique to us. Other countries also have the same opportunity, but there's a strong first mover advantage or natural monopoly aspect to this that I think is important.
Yeah, and you were in that meeting, weren't you? Was it a year or two ago when we went and presented to Treasury and all that about the opportunity? Were you there physically or digitally?
I think I was there physically. So
Yeah,
I'm now part of the National Blockchain Roadmap,
Yes.
where we've been making the same arguments back to government. We've got some, we do in Australia have some very good MPs and ministers and so on who are starting to get this.
Yeah.
I'm broadly optimistic that we are on the right path, but there are a few things that we're doing wrong in slowing this down. But I think a lot of this just comes down to this is a radically new technology. People are still getting their heads around it, and I hats off to you for the work that you've been doing in trying to sort of educate the Australian the population broadly around about the opportunities here. But I think we're still at the stage of just understanding the scale of the opportunity here is one of the barriers.
I think it's a lot of square peg, round hole stuff when it comes to regulators and how slow it is to change any laws or draft new legislation. But part of that I wanted to get into is the taxation of this and the idea of the digital citizen. So if you can hire an architect or an engineer in Southeast Asia for a third of the price of Australia, how is all that going to work if I'm working for a company? And where do you see all that playing out?
Yeah, it's a fascinating question. The Australian Research Council has funded myself and my team to look at this question. We're looking at the tax, the implications for the tax system, not how do you tax cryptocurrencies, but in a world of cryptocurrencies or in a world of digital assets, what does the tax system look like? The work that we're starting to think about this, with a couple of angles that I think are interesting. One is licensed mining. In effect, because the question, this is a public finance question. The question, how does a government raise money from an economic system? So a tax system in the classic sort of way is you tax citizens or companies because you can observe them, and once a year you require them to reveal all the trades that they've made, and you do that. In a blockchain world, that's not quite as straightforward, just simply because it is easier to hide. So you tax the things you can see, you tax the things that are above the surface. So this one thing that then leads to is the possibility of licensed mining, which is actually no different to the idea of a banking license in that sense. You essentially you make it legal for only a certain entity or thing to do a thing, and then you require a payment from it, right? So that's one solution. The other way we've been thinking about this is that the protocols or platforms themselves will probably become tax agents. um, in the sense that the government won't tax individual citizens. It'll just simply go to Ethereum or whatever, and
This
just
is
say, all
very
right,
this is very
we need
much
some money from you.
what I feel China did recently with the BSN. I don't know if you saw this announcement where they're going to be running nodes for all the big public blockchains, and they're going to be
Yeah,
looking at those records and
yeah,
starting to match IPs with identities, and
yeah,
yeah.
yeah. Now, so I mean, again, there's all sorts of politics of this, but the economics of it is actually quite nice because the problem with a tax system that as we know it, where every citizen you have to spend, a bunch of time filling out forms and declaring things, it's just incredibly costly. Fun fact: to raise $1 in tax costs about 30 cents. And that 30 cents is just the cost of running the tax system, the cost of filling out, just the time it takes and so on. So tax money is actually quite expensive to raise. It's far from free. The reason that governments like a system where they'll just front up to a small number of massive players, platforms, and just go, look, we want 10% or we want 20% or whatever, is that's just a cheaper way of running a tax system. That, interestingly, used to be how the world was in the Middle Ages. They were called tax farmers. Governments or kings and queens didn't tax individual citizens because they didn't have no record of who they were. They would basically subcontract out the tax system to what were called tax farmers, and tax farmers would go around and just try and extract money, mafia style, out of the local citizenry, and give a dominant share of that back to the king. I both fear and I'm not sure how I feel about that, but
I mean, to me,
that would be one solution.
When you're talking about all that, to me, I almost think like if the US were just to say to all these top 100 companies that shelter and dodge tax and whatever, just you're all paying this flat rate of whatever 15% of your profits, it would just be so simple, and they'd probably bring up more revenue, and there'd be more prosperity. The citizens would spend more into the economy. It'd be such a simpler model.
Yeah. You've just described Ireland.
Yeah,
that's what Ireland is for multinational corporations. It's just, look, domicile here, low flat rate, easy.
And there's also, is it New Zealand? There's already a couple of countries that have a very simple system where it's just all their payments and that are done on a ledger, and at the end of the tax year, you just click on yes, like submit.
Yeah, so a number of countries, I could be wrong about this, but I want to say Sweden, Estonia, New Zealand. Basically, all of the countries that got into that got digital or e-government early on are now able to do this. So there's a simplified tax system, whether it's simplified administrative tax system or whether it's a simplified tax system in terms of just there's a single flat rate. A lot of the reason we're seeing that is it's just this is tax competition. Companies can choose where they locate, and they'll choose to locate based on tax competition. Citizens are going to enter that world as well.
Yeah,
increasingly soon. We can choose which money we use. We can start to choose which tax regime we pay under. When that happens, you get competition to drive towards simplified tax systems.
And are you seeing that firsthand as well? I mean, I hear the stories about we can't attract talent here because the cost of living in Sydney and Melbourne's too high relative to other places. Taxation's too high. Yeah. Are you hearing all those sort of things, and you think Australia's sort of slowly losing a bit of talent?
Well, I mean, these things have long been true. I think it's different parts of government feel that pain differently, or different. So it's sort of something that I think governments around the world are just generally a lot more aware of. The price they pay when they make migration difficult or tax systems difficult. But you'll be aware of the fact that the world is completely locked down now. But what's interesting about that is that this might be the greatest opportunity for global labor migration the world has ever seen, because it's not people that need to move, it's internet.
Digital
I can
migration,
work from anywhere. It's digital. I can do my work anywhere. If I can send my work anywhere, I don't need to actually go there. So I think this is the sense in which through the 20th century, we had massive globalization and free trade in finance, global financial capitalism, global trade of goods and services. Just that went from largely locked down and closed to just near free, except for labor. Labor was always still very just costs of migration and migratory barriers. That may well be changing, but if that changes, we need digital identity. We need a global digital way to sort of do tax offsets. We need sort of money choices. So a lot of the crypto and DeFi space, and also a lot of this, perhaps whether it's sort of self-sovereign identity or whether it's a sort of digital version of government identity that's able to interact with lots of different that's able to interact with multiple government systems. We need that infrastructure to live in a world where we've got effective global labor markets, and a work from home.
And the way the world's going, it's just like you can see it in the valuation of the big tech stocks. It's just more and more things are going digital. So, where do you sit on this idea of? I think that we need to start talking about possibly things like socialism and overpopulation and creating the right incentives to work versus the inequality that we see. The robot took my job thing, or there always going to be new jobs. Where do you see that sort of the economy going?
Yeah, these are hard, difficult questions. The thing about socialism is that it always relied on a strong nation state. And there's no such thing as global socialism. That's a contradiction in terms. It just simply because you need a state to enforce the ability to not escape it. So that's gone. That's weakened. Just so we can't. So that pathway isn't there. However, the values and the ideas that we're trying to achieve, which are to control inequality, to create a sense of sort of justice in production, all of those goals are still incredibly salient, and we need to figure out ways to do it. But I mean, my sense of this is that we're not going to get there through political revolution. That was a dream that was it was disastrous when it was tried. It's even less likely now. However, tech solutions of this, tech versions of this, have never been more opportune. Or now, one of the ones that we're playing with, for instance, is basically insurance markets, or just peer-to-peer income swaps, where one way that I can create a welfare system. A welfare system is just designed to protect me against the risk of poverty or the risk of job loss and so on. Governments can do that by pooling resources and so on, but we can also do it in a peer-to-peer way, where, let's say, I'm going to write a contract with you. I'm going to take 1% of your income. You'll take 1% of mine. I'll do this with 30 other people. I've now promised 30% of my income to 30 other people anywhere in the world, right? If we've got a mechanism to securely enforce those contracts, if we've got a DAO that can enforce those contracts and I can't escape from that, what I've just created is a welfare insurance scheme.
Are you familiar with Nexus Mutual that I've talked about on the channel a few times?
No.
So they're doing decentralized insurance, and I think you're going to really enjoy that one when you go read about it later. And they're not allowed to call it insurance; they call it cover because it's a mutual and it's crowdfunded. But I think you're going to really like that, yeah.
But just so these ideas, right? So these ideas that are coming out of DeFi, where we need the ingredients for that, we need a digital platform, we need smart contracts, we need some kind of self-sovereign identity that enables me to find you and wherever you are. And we need a digital money. If we've got all of those things, we can do peer-to-peer, what is in effect socialism. Now, what's interesting about this, though, is that this is opt-in socialism. There's no one has to be threatened with guns to do the thing. We can create this is another way of describing this is a scaled-up communitarianism. This is taking the sort of justice and equity qualities of a small-scale society where I can monitor each other and pushing it into a big world where I don't know who you are, but we can still arrive at those same things. So, my sense is that a lot of the sort of 19th and 20th century goals of socialism around equity, justice, and so on, all good things that we want, can potentially be reinvented and rebuilt as tech. rather than as politics.
And I think a lot of the super wealthy are now really feeling that when you see the headlines, Bezos's wealth goes up $20 billion in a day, and these people are saying, I'm happy to pay more tax. Like, we need to do something about it. Once you have a digital ledger and they've got smartphones in Africa and they can send that money directly, yeah, these are the things that become very possible. But I do want to, I guess, finish up by talking about your work on hyperbarter. I'm going to try and say hyper-barterization again. I like that word. But so this is the idea that people are probably familiar with of everything will be digital, everything will be tokenized. And once that happens, it really changes the dynamic. And you might have seen in my videos, we've been talking about using digital property, and you can use that as collateral for a DeFi loan. Reputation might become valuable to use for DeFi collateral. So I love that concept. In terms of tax, I think crypto to crypto taxation, like in Australia, that is a nightmare once we have this hyper barter idea. But yeah, walk us through all your thoughts on this hyper barter.
Yeah, look, so this is one of our funnest ideas. The key thing here is to appreciate that one of the reasons we have money and a single money, say an Australian dollar, is that humans need to be able to think in terms of a unit of account. And so, money is convenient in that human-to-human trade sense. But machines don't need money. Like a machine, I need, my little human brain needs to be able to calculate how much something is worth in terms of a money ratio. But when everything is money, when we've got competition in this explosion in the number of monies, and then tokenization of assets, which makes assets money-like. When we have a world where anything can be used as a money, what I've got is not money in my bank account. What I've got is a collection of assets, digital assets, all of which can be used as money. And you've got a matrix of digital assets, all of which can be used as money. So when we're doing a trade, what do we use? In a old human world where we have to use human money, we'll convert everything into a money unit, and I'll give you 6 monies. I'll pay 6 for your thing, and we'll do that. But in a world where these trades take place, where I've just got this asset matrix, and you do, we're going to do a swap. We're going to do a barter. I'm going to give you 12 of those, 19 of that, and for 12 and a half of those, and boom, 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 swap. Now, my little human brain and your little human brain can't deal with that high dimensional matrix calculation, but my bot can, if it's interacting with your bot. Bots love matrices. The higher dimensional, the better. So this notion of hyper barter is this notion of basically, if we're doing machine mediated transactions, where it's my bot interacting with your bot, and my bot has access to my digital accounts, and it can sign things on my behalf, and it can put things into yours. This machine mediated trade, which is the front end of you interacting with me, they can work directly with digital assets. They don't need money. They can just do that. So what this points is that the evolution of money, once it becomes fully digital and computational, in the sense that we're interacting, I'm just holding my phone up and it's interacting with yours, and our 2 bots are trading, those bots don't need money. They can work directly with underlying assets. Now what's interesting there is, where did money go? Answer: everything is money. And that's the evolutionary pathway we're on at the moment, that is being massively, rapidly accelerated. It's not just this, so the DeFi space is exploding the things that are money. Cryptocurrencies and then tokenization, smart contracts, exploded the space of things that are money. DeFi then enables that it just creates all sorts of efficiencies and trading properties within that space. But the next layer is essentially AI, or just trade bots. You train up your trade bot to with your preferences and to have access to all your assets. And a world of trade bots interacting with each other is the next layer that comes after DeFi, where your trade bot is just spending, every picosecond of every day looking for opportunities to trade
so
globally in that world.
I was going to say, bear with me here. I think you're going to love this concept. So I'm not sure if you're familiar with Decentraland or some of these digital... It's like a digital version of The Sims, where we have a virtual reality where you and I can go and meet up and have a digital conference, and we can buy digital land. Yeah. People are now hanging digital artworks and rare items in their home. Yeah. They recently had a digital soccer World Cup, and the winners all got these gold trophies, and the gold trophies were minted by tokenized gold assets in the real world. So you're opening up just this value of everything like you're talking about, which I just think is so cool. But as you say, well, where did money go? But where did that value come from of the ether and the land and these other things? And this is all sitting outside the traditional banking system, the triangle of central banks, banks, and governments that we spoke about before. It's outside of Bitcoin, it's outside of Ethereum. It's this whole other array of what's the size of the property market, what's the size of all assets on earth, that value and money. I just think it is really taking power away from that legacy system. But it's just the innovation and stuff that is going to come from this is unreal.
Yeah, no, I agree. I'm super enthusiastic about that. But what this points to is, I mean, this is it didn't just evaporate into nothing. Everything becomes money, but you still need this technical infrastructure that is the platforms, and then now we need all of the blockchains to be able to talk to each other and so on. So that becomes the new system, the new banks, governments, and so on, that is being built right now. I mean, what amazes me is how fast this process is happening, because as I said before, it took us about 500 years to build the system the last time, and even then it only just started working properly in the last 450 of those 500 years. We're like basically 5 years in past smart contracts, and already we've got global world financial platforms.
I'd probably say, yeah, we're 12 to 24 months into really having what we would call DeFi. And every week it's a new announcement. Oh, we're now doing under collateralized loans, and we're starting to build trust scores. It's just, it is crazy the innovation that's happening. But I think that's most things I had on my list today, Jason. I hope you guys have really enjoyed that. Is there any concepts or things that you want to talk about you feel really important, you want to get through the audience?
Yeah, look, I think we've covered a huge range of things, but it's I think there's a lot left to study and to understand about this. I think this is just as as an academic economist, as a researcher, this is the single most exciting and interesting thing I've ever been involved with. I sort of can't believe other economists aren't just obsessed with this as you're living in a very special moment of time right now, where the world is actually rapidly accelerating through these institutional technologies.
Do you feel that the US dollar story that people are arguing over at the moment about the world reserve currency, and we've seen even like the head of the Bank of England say that the US has too many privileges and it's too powerful and it's now hurting all these other global currencies. So do you think that is one of the biggest pieces to the macro story here? What happens to the US dollar, the US bond market, the world reserve currency?
Yeah, look, it really is. There's a rise of China story going on here as well. I mean, all we've got to guide us is history, and what history tells us is that these dynamics have been playing out for as long as there've been nation states. The US global hegemon as a currency is relatively recent. It's basically post World War II. Prior to that, it was the previous empires that have held that, but they're always being contested. In the 1980s, there was a lot of thinking that it was Japan that was going to displace the yen was going to displace the US dollar as the global hegemon. The EU, which is only 20 years old as a currency, the reason that was put together, a major reason that was put together, was to provide a sort of counterbalance and potentially competition against the US dollar. That hasn't worked out as well as everyone hoped it would. Ultimately, that may well collapse horribly. But at any one point in time, the dominant currency always seems incredibly secure. You can't imagine a world that's not like that, because when you are the dominant thing, everything is priced in your thing. The global bond market is, the global trade markets are all denominated in your currency, and therefore you have enormous power to effectively print as much as you like of that currency without inflation. But the displacements also happen historically quickly. And if we look back in history, what is striking is not gradual change, but just periods of just constant change, then massive disruption, and then a new hegemon, and then massive disruption. So the lesson I think that history teaches us here is that it'll be stable and stable and stable until it's suddenly not. and it'll be
Yeah.
very quickly displaced.
I spoke about this recently. It's something that I've gone full circle on because when you first go down the rabbit hole, I'd never even taken an econ class in high school. So the last 10 years I've spent entirely self-teaching economics. And when you go down the rabbit hole and you're on YouTube and there's all the, the fear mongering and, the dollar's going to collapse and this and that and the other, and I sort of went through that stage and thought that's not going to happen. But then recently when COVID happened and global markets were melting down, you're right. I sort of changed my opinion that things can actually change really quickly, and the regulators and the Fed, they don't always have everything in control like they portray and would really hope and want the public to believe. It's really confidence that's very important to them, isn't it? As you say, there can be stability, and then things can break, and from out of that, there can be a phoenix rise or whatever it is.
And it's just important to see where that stability comes from. It's just historically, traditionally, the origin of that stability is broad multinational coalitions. So one of the greatest periods of stability in the modern era was essentially post World War II through to 1971, 1972. That period of the global period of golden growth. That was the Bretton Woods era of exchange rate pegging. We had all of the major, now OECD countries all got together and more or less agreed on fixed exchange rate systems. And the central banks in each country controlled their exchange rates through open market operation. It was a global managed currency system. That held together as long as it did. It ultimately blew apart for a number of reasons, the oil crisis being one of them. But that was a political coalition that created that stability. And as soon as it broke up into individual countries, gone. Right. And I think a lot of this is the situation we're in now, is that you either get it from a dominant empire or hegemon, or you get it from a forced together global coalition of countries that need each other and can for whatever reason. Now the EU is an example of that. The EU was a forced first 13 and now 28 countries that forced monetary unification. They all have to link their monetary systems together now in order to create that. So those are the conditions of stability. Now, that it doesn't feel like we're heading toward more of that at the moment. It feels like this is starting to break up.
Yes. And I guess finally, everyone loves talking about price a little bit, and also we'll get the economist prediction maybe. But when Bitcoin has these big waves, and it's really that human emotion cycle that we see of speculation and then fear, but I really feel that it has that growth because all the technologies experience exponential adoption and growth, and we're more interconnected than ever with social media and the internet. And I feel we're going to a place where Bitcoin is going to compete with national monies and Forex and store of value, whether it's property or gold. So I think the exponential growth is going to continue, and there's just such a huge, I guess, potential market share that Bitcoin can capture. And are you invested in Bitcoin? Are you sort of bullish on the price as well as the technology underlying it, Jason?
Yeah, I mean, I've got a tiny portfolio for research purposes. You can't. The best way to understand this area is to be involved in it. But I'm not invested heavily in any of this space. But that's strategically because I'm a public researcher in this space. It's
remain
important that I stay out
unbiased.
of it for that reason. Yeah.
Fantastic.
Much to my sufferance and respect. But
you sold all your Bitcoins you bought in 2010. That's what you're telling us.
Yeah.
Well, that's been absolutely fantastic, mate. Hope you guys have really enjoyed that. We'll have to catch up again in future. I'm sure you're working on so many interesting things we didn't even get to today. But any final words for people at home?
Thank you very much for having me on, Alex. I look forward to being on next time.
Awesome. Thanks, Jason. See you guys.